What is going on, investors? Hopefully you guys are having a great day out there. It is time to talk about FedEx Corporation, ticker symbol FDX. The company just reported their Q1 numbers, and we are going to get into them. We'll take a look at the revenue and the profit like we always do, so you're going to have a very clear picture of what's going on over at FedEx. Now, in the after hours, this stock's down like nearly 4.5%, about $11 per share. And this situation doesn't happen very often, but we are on nearly a 52-week low stock price for FedEx. So you bet you, from a technical perspective, this is about as good as it gets. And if you don't get excited, you probably should just turn off the channel right now and go work at your day job, because this is super exciting from a technical perspective. We'll talk about tomorrow, literally tomorrow, could be an absolutely smoke and buying opportunity for FedEx. But look, we've got to take everything in totality as an investor. We can't just look at the charts. We can't just look at the numbers. Being a great investor, which the investor channel is all about, making you the best investor in the world, not the best investor you can be. I already know you can do that. I want you to be the best investor in the entire world, and I know I can absolutely help you. So we'll talk about the numbers. We'll combine that with the technicals, and we'll kind of take a look at this from, let's take a step back too from a macro level as well, and kind of analyze FedEx from that perspective. So FedEx is falling after a tight labor market. I think we all know what's going on with the labor market here in the United States, and quite frankly, probably around the entire world. Because of the tight labor market, FedEx saw that they had higher labor costs in the quarter, and they had network inefficiencies. I just had the FedEx package delayed. Anecdotally, I'm seeing FedEx packages delayed all the time. That cost the company nearly $320 million worth of revenue during the most recent quarter. Now, what also the company did is they lowered guidance a little bit. They're expecting EPS to come in from 19.75 to 21. Previously, it was 20.5 to 21.5. So they dropped that down a little bit, again, due to labor shortages and those types of things. Now, the company is not giving up. They're planning to aim to hire 90,000 employees ahead of the holiday season. But guess what? UPS is looking to do that. Amazon's looking to do that. I'm sure Walmart and Target and all these companies are looking to do that. So what are they probably going to have to do if they, I don't think they're going to get anywhere close to hiring 90,000 workers. They're probably going to have to raise wages. And that is going to be a problem for margins and those types of things. So we'll talk about that here in a second as well. They also plan to offset that a little bit with shipping rate hikes. But this is what FedEx does every year. Okay, the United States Postal Service does that. I think they already announced their price hikes. UPS does this every year. Every shipper basically boosts prices during the holiday season because they know you don't care. You got to ship the packages during the quarter. And so you're going to pay up. And it also helps offset the cost of hiring more workers, paying overtime, those types of things. We'll see if FedEx is able to pull that off and kind of balance those two things and achieve profitability. We know they're going to achieve profitability. It's how much profitability they're going to be able to squeeze out of that critical quarter. Now, let's take the most recent quarter, because this is kind of a microcosm of kind of what's going on, not only with FedEx, but kind of the economy as well. We're seeing revenues across the board go up. Okay, FedEx Express went up from $9.6 billion up to $10.9 billion. That's solid growth. FedEx Ground went up about 9% from 7 to 7.6. What I'm probably the most excited about with FedEx is actually the freight shipments. Okay, that's the fastest growing business outside of this service segment, which is essentially a rounding error. And you also got other here. But in terms of the reported segments that are significant to the company, this freight segment is up the largest. Okay, we grew this 23%. I'll also tell you why I'm excited about freight as well. Okay, I think over the next, we'll just say 10 years, I think FedEx has got a lot of competition out there, not only from Amazon, but I was reading articles today. You got all kinds of startups in the last mile, okay, the delivery to your doorstep space, which is obviously FedEx's bread and butter when it comes to ground and express. I think FedEx and UPS, they have the most competition in their ground and express segments. But where I don't see a lot of investments and a lot of startups is actually this freight segment. And so I think FedEx can insulate their business a little bit. Are they going to see growth through express and ground when the competition starts to swell? It's probably going to slow a little bit. but they can still make lots of money in this freight segment. So I'm excited about that. I think if you're a shareholder in FedEx, you should be looking very closely towards that segment because there's always going to be money to be made there. Now, in terms of operating expenses, first thing I want to show you though is total revenue went from 19.3 up to 22 billion. That's 14% revenue growth. Look, this is a mega cap company, again, with fair amount of competition out there from the United States Postal Service, from UPS, from Amazon, and all the likes, but they're all of them are suffering capacity issues and employee issues and things like that. So none of them are even come close to running at capacity. So to still grow their revenues at 14% really nicely. Now, unfortunately, all these other costs kind of exceeded that. So you bet you our total operating expenses went from 17.7 billion up to 20.6. I just did a video on Adobe. We don't got those high gross margins here with FedEx. So you have to keep that in mind when you're investing in these companies. So we grew our revenues by 14% in the quarter. Unfortunately, our expenses grew by 16%. So you bet you our operating expenses, our operating income actually went down, and it went down by 12%. We were at 1.59 billion. That went to, we'll round that up to about $1.4 billion. So despite the revenue growth of 14%, our expenses grew 16%. That drove our operating income down, and I think that has investors thinking a little bit short term, okay? They're thinking, look, next quarter, probably not going to be any better. Even into next year, 2022, I don't think it's going to get any better, but here's how I want you to think about FedEx, okay? How are they going to counteract that, okay? They're going to try to hire 90,000 employees while every other retailer and shipper is going to be trying to do the same. They're going to get out of this through innovation, okay? They're going to have to innovate on how to deliver packages, quite frankly. Robots, airplanes, drones, however it is, they're going to have to invest in that. And that is how you counteract inflation, okay? Because I think they're going to see wage inflations. They're actually inflating the prices as well, which could tamper down demand a little bit. How do you fight all that? Is by productivity gains, okay? And by being more productive, okay? And I think they've got their employees already stretched. They're going to have to use robots and those types of things. Whether or not you think FedEx is well positioned to do that, I'll let you to decide. Now, the other insulating factor, I think, is this freight segment as well. This is a business that is growing faster than any other segment over at FedEx, and in my opinion, is insulated a little bit from competition as well, and probably has a lot of room to run. Now, from a cash perspective, this company has the runway, okay? We've got $18 billion worth of cash. That's lower than where we were. We'll show you where some of that cash burned through on the cash flow statements as well. We've got some long-term debt on this one. Oh, I don't want to say only, but you only got about $20 billion worth of long-term debt. That's not that much, okay? Especially when you have almost all of that in current assets. We obviously see other companies out there far, far more levered than that. And if you're a startup in the delivery space, think about the money you've got to invest, okay? I got to imagine to get to FedEx's scale, you'd have to spend way more than, you might have to spend $200 billion, not just $20 billion, which is the amount of debt FedEx currently has on their balance sheet. Now, in terms of cash flows, looking okay, okay? We had this $1.1 billion worth of net income. Again, that's down. Our operating income down. You'd assume after taxes and insurance and those types of things, net income was down. It's basically flat from a rounding perspective. But our net cash provided by operating activities went from $2.6 billion down to $2 billion. So I think some investors are like, this business is reaching some like headwinds, okay? During 2020, this business had a ton of tailwinds, okay? Everybody was at home. Everybody had to order stuff, okay? And FedEx was just loving it. All the shippers were absolutely loving it. And now we're at the reverse of that, okay? People are still ordering, but now we're into labor shortages and those types of things, and even some, to a certain degree, product shortages as well. And we're seeing that play on FedEx's earnings, and certainly their cash flows declined by about $600 million over the last year on a quarterly basis as well. Capital expenditures relatively the same. I wouldn't mind If FedEx gets a little more aggressive there, obviously we went from 1.4 up to 1.57, so we spent a little bit more. I wouldn't mind if they did even more and maybe completed some acquisitions, maybe some startup, maybe get some startups in your blood. I know that's something FedEx has already done. We don't have time to go through all the press releases and all the stuff that they've been doing, but I have been monitoring them and they have been making investments there. And I think it would be wise to continue to do that. Again, this company needs to get more productive. I don't think they're going to get it out of labor. They're going to have to do it through robotics, machines, drones, those types of things. Obviously, that takes time. Okay, and so that's another thing that we'll talk about from a technical perspective if this company as a buy. Now, they paid some dividends in the most recent quarter. So look, even as you wait on FedEx, this is not a high yield. You're getting about 1.2%. It's probably a little higher factoring in the drop that we'll likely see tomorrow, but we got about a $3 per share dividend on this one. So even if you're a little wrong on this one, you're offset a little bit by the dividend that you'll take home with FedEx. We'll also talk about sizing if you're going to buy this stock tomorrow or sometime this week or next week or sometime this year. We'll talk about sizing and how you use the dividend to your advantage in that sense as well. All things being considered, a little bit of cash flowed out of the business, okay, by about $200 million, but this is a company that still has lots and lots of cash sitting on the balance sheet. Now, probably the most beautiful thing you'll see all day outside of maybe the weather out here in California is that we've got a beautiful setup here because we have pulled all the way back into an area of strong demand. I wouldn't necessarily say strong demand, but here's the deal. These lines that you see here on this chart, these were left in, okay? I haven't touched these lines. I extended them out to include this last leg down here that we did with FedEx, but this stock consolidated between $240 per share, which is right where it's at right now. Okay, the stock's literally at $240 right now. It started that consolidation literally a year ago, almost to the day, okay, on 9/14, which is like a week ago, over a year ago. And so, holy crap, this stock consolidated for a year between 240 all the way up to 317, but more specifically, it really consolidated pretty tightly between 240 and 290. And when it broke above, it consolidated for a little bit, and it's come, you guessed it, all the way back here to 240. This is an area over the last year where buyers have stepped in with FedEx. And so it wouldn't surprise me if buyers step in again here with FedEx. And I tell you what, if they don't, if for some reason FedEx breaks this 240 level, look out below, because this thing could get under $200, and it could get under $200 very quickly. There is not a lot of candles and a lot of price action that is supporting this stock under 240. So that would be my first advice to you, is me personally, tomorrow, I am likely going to open up my IRA account where I have an excess of cash. I probably am sitting on nearly 10% cash, which is really high for me. I like to be in that 3 to 5% range. But everything is just blown up, okay? And so, yeah, I know that Evergrande in China is quote-unquote crashing the stock market. Well, I hope it does, because I haven't bought a stock in a long time. Things have just come very, very inflated over the last year, and there just simply has not been a lot of great buying opportunities in the stock market. And here is, in my opinion, one of the first ones that I've seen in a while. In fact, this is probably only a handful that we've seen all year. FedEx pulling down to $240 per share. Now, will I go all in at this point? Will I cash out my 10% and just dump it all into FedEx? You're crazy. No, absolutely not. I tell you what, at a $240 stock price in my IRA account, I like to stay tech heavy. You guys know I like FANG. I like high gross margins. We don't check those boxes over at FedEx, okay? We don't check high revenue growth. This is not a high gross revenue growth company at growing only 14%. It has very, very, very low gross margins, okay? And they're kind of hard to dissect here, but really net margins, we went from 22 billion, we spent 20 billion. Our operating income only came in at $1.4 billion. So depending on how you want to look at this, you could say, yeah, maybe gross margins are high for certain segments of the business, but overall, it's not a very, very high margin business. So it doesn't check that box. But what it does check is you do got a dividend rate at $3 per share, and it is a dividend rate that will continue to grow, because what I do want to show you is for the most recent quarter, even though this wasn't a great quarter, in fact, it was somewhat bad, and as the stock is kind of reacting to this, we earned $4.09, okay? And the reason why that's significant is we pay $3 in dividends for the entire year. For the entire year, you get $3 per share on dividends on FedEx in a pretty bad quarter, in a tight labor market, and not even a great quarter for shipping either. You earned $4, okay? So this is a company that is going to continue to increase its dividend. So it absolutely checks the dividend growth box, which I do like to have in my portfolio. The Apples, the Nikes, the Nvidias, the Microsofts, those companies check a lot of boxes, but they also check the dividend growth box, and FedEx, in my opinion, will do that too. And from a technical perspective, it doesn't get any better than this. When you sideways consolidate for a year, literally a year on the day, and you come down and you bottom at the bottom of that range, if buyers don't step in there, they're crazy. And it's okay if they don't, okay? I will buy 1 share, maybe 2 shares tomorrow with FedEx, looking to potentially get up to 5 shares, okay? I want $1,500 or so in terms of FedEx stock. I don't want to go much higher than that because I'd much rather put that money, excess money, into other stocks. But FedEx is a stock I would love to have about $1,000 with. I will probably start with 2 shares tomorrow in an IRA account. If we break below 240, I will monitor it very carefully because technically it will be absolutely completely blown up at that point. The other thing you can do is wait for a reversal on this one. And what is a reversal? It is a higher low. So if you look at this string of downward, you're looking for a break above the previous lows, okay? And if you want to be ultra safe, go ahead and do that as well, because this stock is in a downtrend, and I don't normally just go in there and just willy-nilly buy a stock on a downtrend, but this is such a great company. It checks a dividend growth box. My IRA account, I'm planning to hold for at least 30 years, maybe not that long. I'm getting kind of old, maybe about 20 years. And dividend growth over a very long period of time is a very powerful thing, and it can offset some other weaknesses that a stock might have, and even your portfolio might have as well. That was FedEx Corporation. Not often that we do hear a video on the channel where it's literally, oh yeah, I think I might go buy this stock tomorrow. I think I will probably do that with FedEx. Hopefully you guys enjoyed this video. We'll be back again soon with more. Thank you for tuning in. Good luck with your investments.